All right, excellent. Well, thank you very much for joining us today. We are doing a recorded webinar with Kiln and ProvenCFO. My name is Andrew. Three partners at Kiln. I've worked with areas to bring Kiln to life. On the call or on the webinar today, I've got the two of the three partners at ProvenCFO. They're brothers, David and Jon Willson. Hi, guys.
Hey, Andrew.
Can you see?
I can see you
Great,
with your
okay.
beautiful Hawaiian shirt on.
Well, you know, it is Hawaiian Shirt Wednesday at Kiln. You clearly didn't get the memo. It's the first day I've shaved in about a year and a half as well. So it's I've got all the workings of a summer holiday without the suntan. Working in the
without being outside.
That's exactly right. So look, guys, we're here today to talk about a number of the emergency loan mechanisms that have been deliberated on by the federal government for some time now. We know the goalposts have shifted over the last couple of weeks as things have been formed, and they are likely to probably change as well. But what we do know is that the application processes are opening very soon for these two initiatives. Now, to avoid any confusion on the topic, it's probably helpful if we just revisit the two application or the two mechanisms in place at present. One is the SBA EIDL, or the Economic Injury Development Loan mechanism.
Disaster loan.
Disaster loan, thank you for clarifying. And the second one is the PPP, which is the Paycheck Protection Plan loan facility as well. And just to avoid any confusion, just to clarify things with, for our audience, could you just start by running through? We'll try to separate the two topics as we talk through, and so we'll talk maybe EIDL first, if that's okay, because I know that one's probably the most pressing of the topics for most companies, and not just for Kiln. We just with a quick overview of the EIDL mechanism. Jon, Dave, I'll leave it to you to whoever wants to take that question.
Go for it, Jon.
Okay. So when President Trump declared the entire United States a disaster area several weeks ago, it opened up the opportunity for small businesses everywhere in the United States to apply for assistance through the EIDL program, the SBA Economic Injury Disaster Loan. And the parameters on that loan are the following. You can apply for loan sizes up to $2 million. The rates is a fixed 3.75%. The term is up to 30 years. What we understand is that if for any loan size under $200,000, there is no personal guarantee. It's also a much more streamlined fast-track process than the typical EIDL. And then when the stimulus bill was signed into law last week on Friday, there was an addition of up to a $10,000 advance or grant. So anybody that watched the webinar from last week heard David state that we had put application in a ProvenCFO for ourselves and several of our clients, and that would have been what, 16, 17 days ago.
Yep.
We didn't hear anything back. We have heard that some businesses did receive assistance through the SBA, but what ended up happening was the SBA scratched that whole system. That whole system was geared up for the traditional EIDL, and obviously due to the volume and the way that they were probably receiving applications and processing it, they just weren't able to get around to it. So they released a completely different website on Sunday, this past Sunday. We had been watching it literally every hour, and we noticed around 8 p.m. Mountain Standard Time on Sunday that website came live for us. We were able to reapply, get a confirmation number. It was a much quicker process than previously before, and we were able to do the same for several of our clients. One of the nice differences on this new application was that you could actually check a box for, I would like a $10,000 advance, and it was mandatory to include your bank name, your routing number, and your bank account information for your business. So when we read some of the provisions that came out in that bill, what the SBA is trying to do, what we understand, is trying to get an advance to businesses within 3 to 5 days following application. So we reapplied on Sunday. We haven't received money yet, but we're hoping. We're hoping the money will be coming.
the landscape's changing. So my observation, and just interpreting what you've said as well, is that the SBA mechanism, the Small Business Association platform, obviously this is a loan mechanism of unparalleled scale to small businesses at a time when there's impact by COVID-19 and the pandemic that's sweeping not just the US economy, but globally. There is now a shift away from the SBA administering those loans and bringing into the mainstream banking sector, and relying on banking partners as well. And I know we'll get into the details of how, what, where, and when. But that is a categorical shift in the way this is going to be administered. Before we delve further into that, can you just give a quick synopsis of the PPP mechanism and how that differs?
Yeah, so the EIDL, think of it as two different, I mean, they really are two different things, even though they're both SBA programs. EIDL, you apply directly with the SBA. There is no bank intermediary. There's nobody in between you and the SBA. You apply directly with the SBA.
Okay.
What's rolling out on Friday, and this has been a moving target. You know, we've been watching this since Friday when the bill was announced. I've been in conversations with many different bankers every single day. The target was, we're rolling it out on Tuesday. We're rolling it out on Wednesday, which is today. We're rolling it out on Thursday. And then we finally got information directly from the Treasury's website yesterday, indicating that the program is rolling out nationwide through the banks on Friday, April the 3rd.
And just to clarify that, it's rolling out to small businesses on Friday, and then the following Friday, it's rolling out to self-employed and independent contractors.
Okay.
Yeah, and so what we should also clarify is it's not going to be available to you just because you have a banking relationship. The lender has to have a relationship with the SBA already pre-established. If they don't have a pre-established relationship, they have to make applications. So one of the things that we've been advising our clients, they are a PLP in SBA language means preferred lender program. If they are a PLP, that means that they have the highest status and certification with the SBA. It also means that you're working with a banker and a lender that knows what they're doing around working through the SBA's program. So this PPP falls under the SBA 7A. It's a category within the SBA 7A. For those of you who have ever done an SBA 7A, historically, it's a frightening process. It can take anywhere between 45 to 90 days. It's very painful. This is nothing like that. This has, I mean, we looked at the application that the Treasury put out yesterday. It's literally 2 pages, with the first page and second page mostly being questions, attestation type questions. And the biggest thing that they're going to be looking for is information around your payroll. So from what I read into it, it looks like get your payroll reports ready for 2019, total compensation. Run another report for 2019 for any employees that you paid over $100,000, because anything over $100,000 per employee gets subtracted from the amount that you're eligible to borrow. Run another report from January 1 to February 15th, 2020. Do the exact same report, total compensation for payroll, and then total compensation for employees that make over $100,000. Okay. And the reason why we're suggesting that is because when it comes time, so this is what's different about the PPP. Last week, I think we may have shared some information. I can't remember if we did or not, but what we were thinking at the time, what we'd heard was it was going to be interest rates up to 4%, terms up to 10 years.
No.
The Treasury docs that came out yesterday state interest rates of 0.5%, 0.5, term 2 years. Payment deferrals on this up to 6 months. However, the loan still accrues interest at the 0.5%. And then when it comes time to forgiveness, this is what makes the PPP unique. When it comes time to forgiveness, you're going to have to prove that from the date that you got the loan for the following 8 weeks after receiving loan proceeds, you paid your employees, you paid your utilities, you paid your rent, pay your landlord, and if you own commercial mortgages or you have commercial mortgages, pay your interest. And the reason why I think they're asking us to do that is because well, there's a couple other things I need to state. They want us as well to, it looks like they want us to get employment levels back to February 15th levels So whatever your February 15th payroll was in terms of headcount and compensation, when it comes time to ask for forgiveness, we're going to have to prove that we have been able to get our headcount and our compensation to those levels, and that we use the money during those 8 weeks following the loan funding for payroll, utilities, rent, and mortgage.
So really, they're trying to set up businesses. They're trying to reinstate them to their prior COVID-19 pandemic state, and have them set up as hopefully things evolve in a positive fashion with the virus, that companies will be not just supporting their existing, paying for their existing obligations, but supporting payroll and people, most importantly. And then, obviously the next 2 months or 3 months is anyone's guess as to which way the pandemic goes in terms of, but assuming a positive outcome, companies are then in a position to really proceed as they were prior to this issue, this pandemic arising. And so to continue driving the economic engine of the US.
Yeah, I think the intent behind this is, I mean, obviously we've been watching unemployment numbers, and we saw this gigantic skyrocket. 3 million unemployment applications, I think it was the first week after the lockdown. And if you think about it from the government standpoint, what are they trying to do? They're trying to drive those numbers down so that we don't end up hitting some of those projections that our Treasury Secretary had projected a few weeks ago. He said we could have unemployment levels as high as 30%. So I think the whole intent behind this PPP is, let's not have that happen. Let's try and get our
stabilize.
By June the 30th, let's make sure that our unemployment levels are back to, hopefully, as close to February 15th levels as much as possible. And then that's how we end up getting forgiveness on this. We can take the loan, pay our employees, keep our lights on, keep everything running, and then ask for the forgiveness after June the 30th.
So one thing to clarify in that process is companies have probably already done layoffs and terminations June 30th to restore their levels of employment back to where they were at the February 15th level. So any changes that have occurred between February 15th and April 26th, they have up to June 30th to try and restore those levels of employment, basically encouraging small businesses to go back and rehire the people that they've laid off. Yeah,
rehire or replace that headcount as well. Yep, absolutely. So look, there's a number of nuances with respect to the PPP facility as well. And so, there's also instances where employers have reduced salary as well. I know there's a cap. Anyone paid below 100,000, that cap is limited to 25% reduction on payroll. And so, as we've said, it ties back into the broader conversation around keeping payroll whole for a company, keeping the employee base whole as well. But I assume anyone over 100,000, if there is a payroll reduction for companies, it has to make, it can be, if you're paid over 100,000 in the company, if you're one of the fortunate few, that you can do anything you want in terms of payroll adjustment for highly compensated employees. Anyone below 100,000 though, that will impact on the loan value. If you are reducing compensation more than 25%, and you don't adjust it, as you just said, Dave, back to prior crisis levels, then that will have an impact on your loan. There's a couple of other things that we need to consider too, which are really critical around this PPP mechanism, and it relates to forgiveness. Right? So, did I break up?
Yeah, just for a second.
You broke up.
Okay. One of the things that we haven't discussed is around the loan forgiveness mechanism as well. And so there are certain expenses, right, so that are defined for use of funds under the PPP that has a direct benefit, not just a exceptionally low interest rate, but also in terms of use of funds. If you allocate capital that you receive through this loan mechanism, there is a forgiveness component to it. Do you want to talk through that just briefly, how that works, and emphasize some of the components of the forgiveness mechanism?
You want me to go over that, Dave, or do you want to go over it?
No, go for it.
Okay. Let me touch upon a couple of things here. So I'm actually going to read to you, and we should probably share this link directly with our viewers after this.
Straight to the Treasury, or
yeah, we'll provide a link to this document from the Treasury. But here's the answer: how much of my loan will be forgiven? You will owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, and utilities payments over the 8 weeks after getting this loan. Due to likely high subscription, it is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. So that kind of goes back to that question that you asked, Andrew. If you need to keep non-payroll costs under 25% in order to be given full forgiveness.
Yeah, which includes rents, and for most Kiln members, that's when they pay their membership dues, it's also rent on their books.
Right.
All right, and then
so that's
there's 3 bullet points that they highlight here. Number of staff. Your loan forgiveness will be reduced if you decrease your full-time employee headcount. So it sounds like you need to keep your headcounts, like we're saying, back to February 15th levels. And there's a second component, level of payroll. Your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employees that made less than 100,000 annualized in 2019. So that was going back to the other point that you made, Andrew. And then this is the rehiring component, which we've been speaking about. You have until June the 30th, 2020 to restore your full-time employment and salary levels for any changes made between February 15th and April 26th, 2020. And so when I look at those those timeframes, so I think what we're looking at here, I think they might be anticipating that a lot of the money is going to be going out by April 26th. And then the intent is, although what they're saying is you have until June the 30th to apply for the loan, they've put several warnings out there saying, please get your loan in quickly because we have a funding cap.
And that means as well, I want to touch on this very quickly. So just to summarize what you've said, use of funds matters. It's not allocated as you will in your business. There are options that have to be maintained. We've said payroll, we've said rent, we've said interest payments on mortgage, we've said utilities, and I've probably, no, that's everything.
That's 4 of them.
Yeah, utilities, I've mentioned that. That's 4 of them. So that's critical. And that obligation spans into Kiln's responsibility to pay payroll and maintain our workforce, to pay our rent obligations to our landlords, and also for member companies to do the same, and that's critical to make sure that the circle of business life is maintained. Secondly, we've talked about the cap on expenses. So what component of those 4 categories, the maximum ceiling that can be applied above and beyond payroll. So rent, certain expenses can't exceed 25%. So that's important. And I just want to highlight as well, we have an informational document that will be sent out. I know it's like drinking from the fire hose for listeners at this point in time, but we've got a really great, concise, particularly on PPP, but also for EIDL loans. We are talking PPP at the moment. We've got a fact sheet that really summarizes this information nicely as well. The third point that I wanted to make, and John touched on this, the importance of timeliness in your preparation. If you are behind the 8 ball at this point in time, it is not too late to get your applications prepared and in. I know a lot of people don't have the support and advisory or the internal capabilities in the startup community to be navigating this independently. And so we're doing these sessions to make sure that we have clarity for our member companies. I just want to give a quick, it's not a plug, but it's just a quick insight in terms of what we've been doing as a company, as Kiln, and what we are trying to achieve for our member companies as well. ProvenCFO is one of our growth partners at Kiln and has been a valuable growth partner as well for not just our business, for our member companies as well. They help assist with managing our books, our financial reporting, our tax obligations as well. But importantly, during this crisis, as we've had an onset, I know the guys, Dave and Jon and their team, have been right at the cutting edge of information release in terms of process, understanding what's happening, when and where, ensuring that at least Kiln is ready to submit their loans. If you are a member company, and even if you're beyond a Kiln member company, if you're a partner or part of our broader community, be mindful of the fact that, as John said, there are finite funds available. And so even though these loan facilities are in theory open for weeks and weeks and weeks, even months down to June, first come, first served. We have had conversations with a number of banking partners. The challenge that you face at the moment is ensuring that your banking partner, your existing banking relationship, has the capacity to serve you both. And EIDL through these loan application processes. Banks will intuitively shore up their own balance sheet, which what that means is they will serve their client first to make sure that they minimize their own exposure and risk to business failures. And that's business 101. That's what they have to do. They've got an obligation to their own shareholders and to their own operations. So firstly, check again, make sure that you have a relationship in place and your bankers that can assist you with that. If not, and irrespective of whether they can, it is highly advisable to find an advisory group such as ProvenCFO that can work with you in preparing your application. And so the second half of this webinar, we're going to spend time talking about the information requirements. Really, that's the nuts and bolts of this webinar, is what you need to do to prepare your applications once the deadline comes around, because there will be it's not called a run on banks in the traditional form where people withdraw capital from banks, but there's going to be a plethora of applications flooding the market of SBA compliant and approved financial institutions, not just banks. It would be credit unions. It might be other fintech platforms as well. Lendio is an example. Visa's participating. Credit unions. We've talked. Dave, Jon, and I have talked about 4 or 5 banks that we know that are participating. So we're really trying to get ahead of the curve on this topic. If you need support in that process, do not hesitate to reach out. We are a community position organization from companies. Dave and Jon will talk at the very end of this, but they'll talk through as well some of the solutions that they've put together to assist Kiln member companies through this, to navigate this journey. It is, in the scheme of things, the amount of work that's gone into this and the amount and the service that's provided, it is a nominal token fee. And so we want to see everyone succeed and come out the back end of this whole, and to be able to, to put their best foot forward. So as I said, if you've got a banking relationship in place, that is excellent. The guys within either your own advisory network or ProvenCFO, as an example, can support you in. Right, I'll pause on that topic just quickly. So we're still on the PPP. I still think we need to probably circle back at some stage on the EIDL mechanism. But while we're running on PPP, Jon and Dave, let's touch on the information that the companies need to really focus on and prepare between now and Friday. And that might be information they have internally on their own books, leaning on their accounting partners, third-party accounting providers, or their outsourced PEO, their HR mechanism. What are the things that people need by Friday?
Sure, I can speak on that. There's a couple other things I want to mention, Andrew, which I didn't mention about the PPP, which makes it very unique. No personal guarantee.
Yep.
No collateral requirement. That's very unusual for an SBA loan. And there's no prepayment penalty and no fees. So you should expect to not actually have to pay anything to get these loans. So now that I've touched on those points, in terms of getting ready for a PPP, I would say the most important things are get your corporate governance documents put together. That would be things like your articles of incorporation, articles of organization. You're going to have to prove ownership. And because this is a payroll-intensive, payroll-focused loan, the recommendation that we're making to our clients is, and if they're clients that we're servicing, we're able to assist them with this. But I'm going to speak to the general public here. You need to put together your payroll compensation for 2019 and then for January 1st through February 15th, 2020. Okay. Run your payroll reports. Run a separate report for payroll for employees over 100,000. We touched upon this earlier in this webinar, but there's going to be a subtraction of compensation paid to any employees over $100,000 from the available amount that you can borrow.
And we're going to need to do that calculation as part of the loan application. We're actually going to be the ones to submit this information. The banks are not going to do this calculation for you as part of the application process. We've got to do the math right up front as part of that application process. How they underwrite that information in terms of that forgiveness is still remaining to be seen. But what we're seeing is that there's going to be a requirement for us to validate all of this information that we're submitting, because a lot of it right now is on good faith and affidavit and that application process. And then to get forgiven, we're going to have to prove that you actually you did what you said you did.
Yeah, and to that point, Dave, I I expect that banks are going to do some form of underwriting on the front end.
They need to.
It's not just going to be provide your payroll reports, you know, or give them a number. Just give them a number, and then they're going to fund on that number. There is going to be some form of verification on the front end, because you have to think about it from the bank's perspective.
Yep.
When it's time for forgiveness, they're going to want to have had the documentation that you provided on the front end that was part of the application as part of the let's call it the cross-reference when it comes time. When you come back in August and September and say, hey, I'd like to be forgiven, or October or even later in the year, they need to have had something on the application side, so that when you come back and you say, let me show you what my payroll looks like today, I'm now in a position where I'd like to get this loan forgiven, they will need to cross-reference that. There's going to be a second level of underwriting. To that point,
that's right. So it's the government. It's not the government that does the forgiveness. It's the
Exactly.
bank that has to verify.
That is correct. That's a good point. It's not the SBA that does the forgiveness. It's the actual lender.
You're also required to submit your tax returns as part of that whole application. And reading through that application, they're saying the lender will calculate the loan amounts based on what you provide them, based on what you've calculated, and it's also related to the tax documentation that you're providing up front.
Yep. So we've got payroll reports, we've got corporate governance documents, we've got tax returns. Any other financial records, anything else that needs to be covered and prepared in advance?
Some of the bankers I've talked to have also said things like the 941s, right, which is the actual proof of what you've submitted on payroll. We don't have absolute clear guidance yet, Andrew. We're doing some guesswork and some calculation based on what we're seeing on the application side, based on some of the guidance from Treasury in terms of those dates, you know, on rehiring and whatnot. So those are the things that we're putting out there to our clients in terms of getting ahead of the curve right now. Your tax return, your articles of incorporation or organization, and then definitely the payroll reports 2019 and the January 1st to February 15th.
Dave, did you have something to add?
To add to the things that we don't know, the guidance that they've given us in terms of what counts as payroll is also not fully baked, where we're asking questions back that says things like, well, what about 1099 payments for people that are subcontractors or employees away from the office? Do those count as payroll? And we don't know the answer to that either.
It doesn't hurt though to prepare that information, assuming so as the goalposts shift and more information becomes available. I think the important thing to note is we have got clarity on certain documentary requirements. That's not going to change. They're not going to pull that back. So the things we've discussed are assumed that they'll be part of the application. As part of the payroll, you've got your salaried employees, full-time, part-time. I would also recommend them, by the sounds of it, do some analysis and pull together information on your 1099, your contractors.
Just to be safe right now, we're expecting that to be definitely part of the process as they're having self-employed and independent contractors come online the following week. There is definitely a mechanism for people that are 1099 to also get assistance.
Yeah. So there might not be double count. So just be mindful of that. Keep that. The important thing for companies that are listening, keep that information separate though. Don't blend it into your payroll data. Just keep the two separate, and that can be aggregated if it needs to be at a later date. I want to wrap up on this shortly, but I know that I've got a list of things here that come through our cheat sheet, our PPP cheat sheet that will be shared with Kiln members and beyond. But so to summarize, as part of the application, you are going to need to you're going to need to certify as part of your application as a member company or as a company the current economic uncertainty that makes the loan necessary. That's one. That your funds will be used to
that was
not you will not receive another loan under the program is interesting. Okay. And that begs the question as I pivot out of this back to EIDL. That's a question for us. We'll park that. That you provide the lender all the relevant documentation that verifies the number of full-time equivalents, the dollar amount of payroll, the interest payments / the covered rent payments, the covered utilities for the 8 weeks after getting this loan. That's critical. And we've said the loan forgiveness will be provided for the sum of documented payroll costs, covered interest payments, covered rent payments, and covered utilities. Due to the likelihood of high subscription, it is anticipated that more than 25% of the forgiven amount may be for non-payroll costs.
Yeah.
And then it says, obviously you can't knowingly make a false statement under the loan application. That would be punishable by law. So there's ramifications there about making sure you've got everything certified, well, not certified by a technical sense, but making sure that it's valid.
Yep.
And that this information, tax documentation, needs to reconcile with what you submitted to the IRS. So that, I think, is a good segue into back to the EIDL loan. We've covered PPP pretty extensively. Now, I've got a list of questions which we've deviated slightly from, but I think we've covered pretty extensively. Can companies apply for both loans back on the EIDL and the PPP? Can they apply for both?
The answer at this point is yes. One of the things that we should highlight on that EIDL is there is that $10,000 grant money available to you. So in the documentation that we've read, the indication is that whether or not you get approved or denied, whether or not you take the loan, you're eligible to receive that grant money. So
grant money, meaning for people who don't understand grant financing, is free cash. To put it bluntly, it's strings, partially strings attached, but you don't have to repay it.
Right. So what happens is if you do take the EIDL loan or the PPP, that $10,000 is backed out. Okay. So it actually gets subtracted if you decide to take any of these other financing vehicles. So the advice that we give all of our clients is definitely apply for the EIDL if you've been economically injured during this COVID crisis, and then also apply for the PPP. So we've been getting clients.
So can I get you to pause on that? So what constitutes economic injury? Because obviously PPP is
yes. So the definition of economic injury is pretty broad. It could be things like we've had a bunch of contracts canceled, upcoming contracts, or for some businesses, the economic injury is immediate. I mean, if you think of businesses who rely on customers coming into their doors, they have been economically injured immediately from these measures. For some businesses, there could be a lag effect. You know, you may not necessarily right now have experienced economic injury, but you might be looking down the road to the rest of April, the rest of May and June, and there's no business, where usually you would have had business lined up, or you've had customers cancel, or the marketing efforts and all the sales efforts that you're making are resulting in nothing.
So it's known losses. So it's known losses up until a point in time of application, but you are also able to forecast ahead. And it's got to be on a reasonable basis. But if you know that you've got cancellation of contracts, you're able to forecast under this mechanism, no?
Yes. Yes. So at this point, Andrew, I mean, we've put an applications under the new website. We haven't had any feedback yet from the SBA. No communication yet. Okay, so I want to hold back a little bit in terms of what we're expecting, but the EIDL is designed for any business that feels that they've been economically injured, and that definition is up to the business owner. You know, at ProvenCFO, we can't necessarily make that determination for each business, but if you own a business and you've been hurt, and you know you've been hurt,
what do you need? So I'm a member. I'm a company. Well, I am, but hypothetically, I'm a company, and I need support in providing submitting an EIDL loan. What do I need to provide? Both my advisors, or what do I need to provide through the application process? We've talked about PPP. Now let's talk about EIDL.
So the interesting thing about the EIDL at this point is we don't have clear guidance on all the documentation required. However,
to get your place in line, there's not as much requirements on the initial step. The initial step is basically getting a ticket to hold your place in the line to talk to the underwriter. Just like going to the DMV. Yep. Yeah, I'm waiting for my ham sandwich, and I'm not sure if somebody's going to give it to me or not. That part of the application process it can be fairly straightforward. It's the other stuff behind it that we're still waiting on to see if they get rid of any of the initial application process.
Well, let's talk specifics, because I know you've applied.
Yeah.
I know that Kiln's applied through the help of ProvenCFO. Let's talk specifics though. So what's the type of information you're seeing required? Because people are going to have to prepare information to share with you. So it's EINs.
Yeah. Do you want me to touch on that, Dave, or do you want to go over it?
No, go for it. You're doing hundreds of these applications now.
So on the front end, on the submission side, just to get your number and confirmation number from the SBA, they're asking for company information. So those are things like the business legal name, trade name, the EIN, what type of organization is it, gross revenues for the previous 12 months up until January 31, cost of goods sold for the same period, address. Business cannot be a PO box, has to be a physical address. And then it comes down to, when was the business established, current ownership, number of employees. There's attestation requirements as well. They're not unusual, things like, let's make sure you're not in the business of lobbying. Let's make sure you're not a member of Congress. You cannot be a state, local, municipal entity.
You cannot be a pornographer, which is a new question.
Yeah.
There's a, yeah, they added that one in.
You cannot.
Let's just edit that section out just quickly. There we go.
It's actually a very big question that they ask. It's a very prominent question.
Good. Right.
You cannot be involved in any illegal activity as defined by federal guidelines.
I think that's what we were going for, John. Thank you.
The other interesting thing is, if you own property and you've lost rents due to disasters, for instance, if you own commercial or residential property, you can actually specify the amount. So even if you're a landlord with a single purpose entity that owns a piece of real estate, and that piece of real estate has been impacted and it's in a business, you could apply for the EIDL. You also have to specify where you want funds to go. So banking information, and when it comes to, if the business is owned by an individual or individuals, you have to provide all of their information.
Right.
We know that there's going to be credit checks, and then go ahead, Andrew. You had a question.
I know it's been covered in conversations and other webinars that we put together, but ownership and control. Can you talk to that and how that implies? I know that there's a threshold, there's a 25% threshold on any shareholder ownership, but there's debate around and has been extensive discussion and lobbying as well by some of our banking partners as well around how affiliates and ownership and control is viewed. So as an example, if you've hit an economic stumbling block, making sure that you're capital partners, and the vast majority of our member companies, for example, are VC backed. And so there's a component around this and around control. Can you talk to that?
Dave, do you want to answer that question on the control and?
Yeah, so in terms of the application process, they haven't given any specific guidance on whether they've gotten rid of that entire control process on the EIDL loan. In terms of the PPP loan, it looks they've indicated that they've gotten rid of the credit elsewhere requirements for the PPP loan. What that necessarily means in terms of showing it on the PPP side, which is where your banks and everything is lobbying on getting rid of that control issue. That looks like it's been scraped, but we don't necessarily know how that actually looks when submitting the documentation. That has indicated there is no credit elsewhere requirements. Back on the EIDL side, we're submitting with full information, including here's your VC-backed partnership, because there is the last that we had heard they were working on scraping the credit elsewhere requirements, or in this case, the control requirements. And that was anyone that had 20% or more ownership of the business, you had to disclose. In this case, we're just fully disclosing it because there is no specific guidance on the credit elsewhere back from the SBA on the EIDL program.
Mm-hmm.
John, had you heard anything different in the last 24 hours? Things are changing so rapidly. We're keeping our ears to the ground on with Treasury and all the banking partners, but that's what we've heard at this point.
Yeah, I mean, we have some pretty large clients that obviously are also concerned about this affiliation rule, where there are multiple entities that roll up into one entity, and the entities down here, like at the subsidiary level, employ less than 500 employees. When you roll it all up, it becomes quite a large organization. We're still advising them, and they're still, whether we advise them or not, they're moving forward with the applications on the PPP.
And on the EIDL.
And the EIDL. So
as long as they have 500 or less employees, that's the initial requirements to go and get your ticket in line with the SBA. As long as you don't have any over 500 employees, or you fit into the guidelines on what's considered a small business, you should be applying as long as you can meet those other attestations.
Yeah, I mean, I need to highlight this. You get different opinions from different people, Andrew. Some of the bankers that I've talked to have said things like, we're just going to be looking at this EIN, okay, and the sizing requirements on this EIN. Some bankers that we talk to are saying, no, you know, we're going to be looking at the whole thing. We want to size up the entire thing. So our advice, because it's so vague, it's not clear, is your EIN employs less than 500 people, apply. And there are some carve-outs already. Let me go to those. Specific industries, there isn't sizing requirements. For instance, if you are in, where did I see that? Let me see if I can do it from memory. Do it from memory. If you're funded through an SBIC, no sizing requirement. If you are a franchise listed on the SBA, no sizing requirement. If you are in the food, like the restaurants and the hospitality industry, no sizing requirement.
Hotels.
Yeah, hotels. And then the SBA also could do sizing based on your NAICS code. And so there were certain food manufacturers, like I was talking to a food manufacturer the other day that had just over 700 employees, but because of their NAICS code, and NAICS is NAICS for those of you that don't know what I'm saying, can't understand what I'm saying.
That's all right. We're speaking from the Southern Hemisphere today.
Yeah.
Why did we put 3 Southern Hemisphere guys on the same call without any interpretation?
Smartest guys in Utah? Ooh,
we don't have an interpreter. Yeah,
that could be controversial. Moving right along.
Hopefully there's subtitles on this. But under their NAICS code, they were actually still counted as small, because under SBA's NAICS code calculator, they could have up to 1,250 employees. So there's a lot of interesting things happening right now around this whole sizing thing and this affiliation thing. So what are we advising clients? Apply.
So apply to both mechanisms, really. So at the end of the day, it's get applications into both. The timing on this, both will open at the same time?
No, EIDL is now. Apply now on EIDL. PPP, okay. Get all your stuff ready for Friday.
Great. Okay. So we're crystal clear on that topic. Now, as an interim measure, so there's obviously, it's getting the information prepared and submitting. What do companies do? What do you advise companies to do as a bridging period if people's revenue has fallen off the cliff, and they've got to try to meet payroll requirements in the interim, and then these other obligations, admittedly noting that they can and pay back those obligations. But what are you advising companies to do?
We're advising companies to do lots of things. If they can't cut their obligations, there are some express bridge loans. There's an express bridge loan that just came out from the Utah government. Some of these bridge loans are very short term. We don't know how quickly they're able to move. You might have, for example, the Utah one, there's a $20,000 bridge loan. It's 5 years. I think there's a very low interest rate on that. But you do have to apply directly with the utah.gov. It's not being put out through the banking relationship. And so the government, because of the size and how many checks and balances are involved, is going to take a little bit longer to move money. But at the same time, we are advising companies just fundamentally about how to stretch the dollar, right? Is to have conversations with the people that they're worried about paying and say, you're probably hurting, I'm hurting, let's make this work together. I still want to make these payments, but I'm not going to be able to make these payments until I get this funding from the PPP loan or the EIDL loan, or when things pick up. But let's not hurt the relationship by not having the conversation. So the primary thing that we're encouraging people to do, if it doesn't relate specifically to getting money, it relates to have a conversation. Pick up the phone, send an email, say, let's make this work. Let's get through this together. Let's all hold hands, because that's what's going to build the country back up the quickest.
I think that's right. Yeah. It's a good synopsis in that everyone's feeling pain at this point in time in different ways throughout their business, and it's really hard. The human psyche is one to protect one's self-interest, but really collectively, I think there's a lot of good initiatives out, and I know Silicon Slopes, for example, is really leading the charge on this in terms of being collaborative in knowledge and information sharing, but working collaboratively, because in the hard economic times and the downturns, hopefully we've just come from a fairly robust economy where the banking system is still fundamentally robust. We've just had a severe demand shock, and that is something that no one could preempt, and it's almost impossible to plan for.
Yep.
And so ultimately, we hope that there's going to be we'll see a shift in current circumstances as hopefully things evolve on the vaccination front, on the isolation and social distancing measures. Over time, the bad times will be replaced with the good, and there's people have long memories, and that's not a threat. It's just
yeah.
Of time, I know we've had some really good conversation here, and hopefully insightful conversation as well for listeners and watchers of this recording. I had another question, just quickly. Loans rolled into the other or consolidated?
Yeah, so that's a good question. So we've seen different attorneys' opinions on this, and the consensus looks like you can. So if let's say that you obtain the EIDL first, we know that you cannot have both. We know that. So it would be advisable to apply for the EIDL. If you're approved quicker than you're able to get approval on the PPP, take that loan, and then refinance the proceeds of that into the PPP, with the understanding that the forgiveness component of the PPP is tied to that payroll. Mm-hmm. It's all payroll focused. So yeah, that's our advice. I mean, our advice is
EIDL has the potential to provide and supply a higher level of capital, but obviously the rate is higher.
The rate is higher,
and not forgivable.
Not forgivable. It has to be repaid.
Yep.
But has a longer term. The PPP has a very targeted approach to address those 4 categories of costs: a lower rate, lower value, but it is intended to really impact in the immediate term.
Yeah,
and so
I need to clarify too on that, Andrew, because we don't have absolutely clear guidance as of today, Wednesday, on this. There is a question inside of this application for the PPP that came out yesterday from Treasury. It's question number 4. Has the business received an SBA EIDL between January 31, 2020 and April 3rd, 2020? If yes, provide details on a separate sheet. So we know that this EIDL new application site went live on Sunday. We know that there haven't been a lot of businesses that have received money since Sunday. We really don't understand yet if you end up getting this EIDL, there's no disclosure on here for an EIDL post April 3rd. You don't have to disclose that. It's just between January 31 and April 3rd. So this really is a moving target on this.
Yeah.
But
11:28 a.m. on Wednesday, April 1st. That's what we know. In a couple hours' time, we will probably different, but we'll see.
I think that's a valid point. You know, this is, we're trying to keep members, member companies updated with relevant information. Hopefully this has been helpful in terms of the informational requirements and just down the key components of both the EIDL and the PPP. There's a plethora of information now in the market, but this is intended, as we'd said at the onset of this conversation, to help companies appreciate the urgency and understand the informational requirements for their applications and some of the key considerations as they're considering the two facilities and mechanisms. So we will follow up this conversation, I think, with collateral that we'll send out with the link to this webinar. And secondly, as the landscape evolves and information changes, or we get new information, we'll be sure to come back to the community as well with an update. I just want to conclude on how member companies or companies in general should be preparing. What can be done by ProvenCFO to assist companies through this journey in preparing information and submitting documentation? What are you putting together, Dave and Jon, as a product and service?
Go for it, John.
The big thing is we've already gone through the process ourselves and for many clients at this point on the EIDL.
How many?
60,
just so people know.
Or 70. I think we're hitting 70, 80 in the last 24 hours.
Yeah.
Okay.
So
you've got skills and experience.
Yeah, so we know how to navigate through the submission process on the EIDL. We also understand enough about what the SBA is going to be looking for once they actually do respond to us and respond to the business owner. We've also done significant amount of loans. You know, between Dave and I, we've been business partners for since we were like
25 years at least.
25 years.
I think, yeah.
But you know, I've been in banking and lending for 20 years. We worked together through a previous crisis. We know how to adapt. We know how to work through. So working with ProvenCFO through this, you're going to be working with a team that is calm, that is going to be able to guide you, that has systems. Essentially, we'll help you with getting the application done on the SBA's website. And when the PPP goes live on Friday, we've basically done a bundled deal. So if you come to us for the EIDL, we'll also help you do the PPP as a courtesy. And we work with multiple banks that have PLP status on the PPP side that are ready and willing and able to take applications. So we feel that as we get you ready for the EIDL, we can also assist you with the PPP. If you want to come to us just for the PPP, we can assist you with that as well.
Great. How do companies reach you?
Best way would be email us at support@provencfo.com. And
include your phone number and email address and maybe a first name. Yeah. We'll get in contact with you ASAP.
And we should clarify we're a team of 14. We're here in Provo, Utah. We are ready, willing, and able. We've got some great systems in terms of pulling a client in from an application state all the way to getting all of their applications done on both the SBA and the banking side. So
excellent.
Yeah, we're ready.
Well, look, I can attest to the fact that you've been fantastic partners to Kiln through our journey, both from an accounting and finance and taxation perspective, and have really shown 3 or 4 weeks in terms of your support, both to Kiln as a business, but also as a thought leader and being incredibly proactive in preparing for these applications. So, now we're going to summarize. You have the information now. That we have the known knowns across the PPP and the EIDL loan process. Apply for both. EIDL can be applied for immediately. The PPP application process opens on Friday. Get your information ready. If you need support, contact an existing advisor or reach out to ProvenCFO. And finally, we are stronger together. So let's try and get through this all together. If you have questions, hit us up, hit ProvenCFO up, and we'll also endeavour to keep you updated with new information as and when it becomes available. But I just want to thank Dave, and I want to thank John, and I want to thank the team at ProvenCFO for preparing the collateral and supporting information that will accompany this webinar link. Fantastic work, guys. And I wish all of our member companies and our community companies that are in the broader Utah community, tech community, all the best as they navigate the uncertainties ahead. But we're a little bit clearer than we were a week ago. We're a little bit clearer than we were, definitely clearer than we were 3 weeks ago.
Yeah.
So stay strong, live long and prosper. Did I just say that?
Yeah, you did. Hey, Andrew, you guys are great. Kiln, all the guys at Kiln, you guys are rock stars.
We try.
So keep putting this stuff out to your members. They absolutely need to hear this stuff.
All right, gentlemen. Well, thank you very much for your time. I do appreciate it. And
thank you,
note,
Andrew.
Thanks.
Going back to my pina colada and sun lounge. Thanks.